dokie. We are now live, so hello and welcome to those of you joining us just a couple of minutes early. My name is Charlotte. I'll be your Money Show host for this session. I do have Peter here with me in the Zoom room. He's ready to begin his presentation on time in just a couple of short minutes now at 1:05 p.m. Eastern Time. Thank you for your patience, and I hope you're enjoying your day so far.
For those of you who haven't spent any time with me, I just finished the Bloomberg interview, so I'm kind of like Arnold Schwarzenegger here. I'm back, and they asked me, would you what time slot would you like? And just so you know, I asked for the lunchtime time slot because I have found that people that are sitting down having a sandwich who want to watch me on the phone and get educated and learn something while they're eating are far better audience than someone nodding off at home. So I chose this slot. Enjoy your lunch, and I'm looking forward to chatting with you.
And on that note, I say we should go ahead and get started. Hello, everyone. It's a pleasure to have you here for another session. Now, please join me in welcoming Peter Thomas, Chairman of Asecure, acting as the Chair of Offshore Development. Now, Peter's perspectives are based on 40 years of experience in metals trading, and he is here today to share some of his expertise with us. So, to our live viewers, please share any questions you have throughout the session today in the live chat box. It's located on the right of your video player there. We will try and do our best to get to some of those audience questions at the end. And with that all said, Pete, I will hand the mic on over to you. Be here if you need me, but the floor is all yours.
Well, thank you so much. Good afternoon, everyone. It really is a pleasure. This is going to be a fun little session, I hope. I'm going to try to break this into three sections to cover what really influences gold. You wake up in the morning and it's $40 higher, $40 lower, and there's a lot of nuances that have to be learned that drive this price. And it has been really kind of a perfect storm with interest rates, the global economy, and the war that's going on. And I'll tell you something else. We've seen big, big action in the value of fiat currency, which has also been driving the gold market. And also, I'm going to try to bleed into silver, platinum, and palladium as they are precious metals towards the close if we have enough time, because I feel that's such a viable alternative. And speaking of alternative investments, anything that I cover here is for physical gold. If I make any inferences towards a trade, it's just for me personally, it's not a recommendation. So I want you all to know that as we start. Now, I just finished the show with the review on the Fed at Bloomberg, and it's really interesting. A lot of people are asking me, well, when are we going to see rates go down? When is this going to happen? What are the rates going to be? And from the beginning of the year, I have to tell you, I've been telling everyone that rates would not come down. They just would not come down. And I will tell you why. As when President Trump went to the Federal Reserve. I think he was the first president to walk through the Federal Reserve. And he was walking with Powell, and they had their hard hats on, and they had the long shot with the camera to add a little something to it. And as we saw, uh, the long shot showed Powell wearing this hat, and he's very short, quite pale, with the big, thick nerd glasses. And when he turned his head, the helmet would move a little bit. And he's standing next to President Trump, who has been wearing a hard hat most of his life, doing construction sites. He's a large man and has a very large presence, shall we say. And they walk up to the camera, and Powell starts talking, and President Trump looks over at him and he goes, how much are the requests that we've seen to build this office building?" And he says, "Oh, 2.5." And he opens his jacket and pulls out, and he goes, "Funny, I have the request for funds sheet here, and it's 3.1 billion for this office building." And he goes, "If you go over to the right and add the numbers," now he's making an inference that the head of the Federal Reserve can't add. I'm just laughing so hard. And he looks over at Paul, and Paul's like, his eyes are wide, and he's like getting ready to start stammering. He looks at him and goes, "No, no, no, it's 2.5." He says, "It's not what the numbers say. It says 3.1. You got to add this up." And Powell was crushed. And from that day forward, you could see he was different. And I think that that sort of exemplifies the really didn't. Powell was not out to placate Trump in any way. He really disliked it, in my opinion. And we did not see a rate cut. And I looked over at my associate, the CEO of AU Secure, and I said to him, I go, "Unless we find a million jobs of unemployment in a closet somewhere, we're not going to see rates come down." Now, bingo, we did find 900,000. It was a complete mystery. Everybody went, "Oh, wait a minute, you have 430 PhDs working for you, and you missed 900, you missed 100,000 jobs a month for unemployment figures, and that was kind of the end of it. And we saw rates come down. And the interesting thing was that when that one rate came down, the next day they came out and said, "We foresee two more quarter point cuts." So the miracle happened. We found 900,000 new unemployed individuals, and the rates came down. And subsequently, as the yields lower, people started looking around for more yield. And here's an interesting thing. We have 7.2 trillion with a T dollars sitting in money market funds. And when you start chopping those rates down, they're going to start looking around for higher yield. They're also going to see the dollar come down even more. The dollar has been in an absolute tailspin. And the weakness in the dollar from the rates going down, they're going to start hunting for more places to invest, and gold looks more attractive. So from the geopolitical side, onshore now, I'm talking North America, we'll move offshore shortly. Right now, we're looking at a reduction that is going to cause some inflation. A lot of money's going to come into the market. And also, tariffs are still in effect, causing prices to be higher. Look at copper today. And also, we're going to see uh, real a real hunger for a little bit higher and safer returns. Gold's up approximately 43% on the year. So it is still very, very attractive. We have seen, just so you know, people such as Goldman Sachs, JP Morgan, a number of big research centers have come out and said $4,000 gold is definitely in the mix, and we'll probably be seeing it shortly. And there's no doubt we've been just in this updraft, in this perfect storm of geopolitical problems, currencies dropping, things of this nature. And so I think we're going to continue to see this uptrend. And the thing is that the reaction globally to that cut, even though most of it was pretty much baked in, but the two others weren't. So we saw a very, very nice rally continue. So that is the overview of the Fed cutting. And I believe that That alone will continue to allow us to maintain strength. The gold market itself, with a reduction in interest rates, is now 18, let's say 18 solid months higher. And what that tells me is that it isn't just a bull market, it's a mature bull market. And just for all of you, I have probably in the last 6 to 9 months, I haven't been calling it a precious metal. I've been calling it a technology metal, both gold and silver, because the cooling fins on the AI systems are gold plated. The inside, the chips, they use quite a bit of gold, and a lot of that is not recovered. So we're seeing gold going out, not coming in. And I believe that gold is a technology metal. The new demand has been drawing it off the shelf. And as you can see, we've had large numbers coming out of Switzerland, and I believe a lot of that is going into technology. So our mature technology market is going to continue to have its march up and continue to be bid. And we're seeing big players. A quick shout out here to Barrick Mining. Barrick Mining just dropped a 1.4 billion in investment into some mines. And also they just had the largest gold discovery in history. And it is a monster. And we have seen their stock explode to the upside. Of those of you who watch gold stock, that's the reason. And we will continue to see them develop it. Now, the problem is it's deep, and we will not see results for a while. But they own it. They own the product, and I was reading the yields on the core samples. They're very, very high. So I think they've got a big winner there. So let's move from North America to China. Now, it goes back and forth. We see China's number one in consumption. Also, they're number one in mining of gold. They're very good miners, and their yields have been very good. They're bringing a lot of metal out, and so they have a two-prong attack on gold. A lot of that gold goes into the People's Republic of China's bank, where they hold a great deal of gold. I know you're going to find the PBOC's statements as inaccurate, shall we say? And in my opinion, that is probably by as much as 50% their holdings. China holds a tremendous amount of gold. And China, I know it's hard to believe that they cheat, but it's certainly how it looks. But here's the thing that we're seeing in the news. We see two things going on. Very, very, very hard push is BRICS, which is the group of India, Russia, and China are the biggest players in which they want to talk about paying um, all of their national bills in a percentage of gold. And the second thing is if you're not familiar with BRICS, you should sit down and read it. But the second thing is that the talk about dollar dumping. Let's take a real peek at that, because it is very germane geopolitically to the dollar. We're throwing dollars away. We don't want dollars. We don't want anything to do with the U.S. And that has been the general theme, but it's not true. I say that unequivocally. They're not throwing dollars away. They're not dumping their T-bills. What's happening is, and bear with me for a moment, China is in deep financial trouble. And I mean deep. Let me give you an example. All right. Their airline stock. Now they have three major airlines. Air China, China Eastern, and China Southeast. All right, that's their three big ones. They're losing 26 million won a day. Think about that. If you have $26 million and you push it into a table and you set it on fire every day, that's what's happening with their major airlines. They lost $4.7 billion. That's just one business. That's not reflecting on their vacant cities, which they built to create jobs. 5 major cities, the size of Manhattan or larger, nobody living in them. All right. They're really amazing train systems. They're bullet trains. Some of the experimental stuff they're doing with levitation, which originally started in Germany, is amazing, but they go nowhere. They have no passengers. They're spending tremendous amounts of money on that, and it's ending up just burning through cash. And their military has gotten gigantic. The ships they're building, things of that nature, continue to drain away. And I always like to say to my audience, capitalism really looks easy until you try to do it. When you switch from an agrarian society to a pure driven by manufacturing base that China has become, it looks easy, but it isn't. It is a very, very complicated system. So what's happening is they're not dumping dollars. They're taking a stronger currency and buying gold. And I'm fortunate enough to sit in a position where I see the offshore purchases, and I'm seeing as much as 13 tons a month going to China. And the orders have not slowed down. When China came out and announced, "Oh, we're pulling back," they pulled back from receipts from the People's Bank, but they kept bringing gold in through Hong Kong. So they have a myriad of ways to receive gold. Also, what's very important to remember, why I say that they might be fudging on their numbers, they receive a tremendous amount of gold from Africa. They have a lot of development going on, let alone to say that they have the last 8 to 12 years, they've spent over $1 trillion developing their rare earths program. And anytime you develop a mine, it is a gigantic loss initially, but now they've pretty much got that locked down and profit matrix is starting to pick up. But let's look at some of the little things that I enjoy about gold real quickly. And while we're on China, those of you who don't know me, I used to trade on the floor and was a member of the exchange and a clearing broker on the floor. But I used to hang up my coat, my trading coat, and I would go make a motion picture. And I was the weapons masters for Paramount Picture Studios for a number of years, and was fortunate enough to be involved in a lot of very interesting projects. But the point of this is that I still keep up with what's going on in the weapons world. So when China had its parade and they showed off their latest weapons, I'm watching the parade, and here comes a torpedo being pulled, and it's blue tipped. Now in the military, everything is what's called OD green, which is olive drab green. Everything is DRYAP. Anything that's blue is nuclear, all right? That it just stands right out. And I looked at it and I went, wait a minute. They've got a brand new nuclear tipped torpedo. Now, I mean, it's a parade, they're bringing weapons, and we got this jet, that jet. Now I get on my chat room with Special Forces chat room. I get in there and it's like exploding. I mean, it's just lighting up. I'm looking at this and I'm like going, what? And they're going, look, one of the guys who was a boomer, who was a sub guy, says they can go out off the shore of Taiwan, what's called catfish, where they have a submarine go down to the bottom and it kind of sits on the muddy bottom and silts down into where it's almost invisible with a nuclear tipped torpedo, which is absolutely undetectable. And if they invade Taiwan and a fleet, aircraft carrier fleet, comes in to protect Taiwan, one undetectable torpedo could take out the entire armada. So and it was flying from that. And we ended up seeing almost an 80 or $90 rally in gold. And I believe it was from all the scuttlebutt on not just that one weapon, but the other weapons. So I kind of like the little tidbits about gold and what influences it. But the larger uh actually the largest in the geopolitical side is the currency sinking, the lack of faith in the fiat and in the yuan and the yuan itself. And we're seeing tremendous participation by the Chinese insurance companies, where it was illegal for them to purchase gold before. Now that has been lifted. So we have billions of yuan coming in, buying more and more gold. So from China itself, this is our second one. We have the Fed. Now we go over to China and what's going on in China, which is the erosion of the yuan and the participation of major companies in the country itself, and the massive unemployment and lack of faith in their currency. And that's what's giving us this Chinese rally. And I hope that covers it for China. We have a lot more. I'll be taking some questions later if I don't run out of time. But I really want to jump into Russia now before we go, because it's important that we understand we are losing 40,000 human beings a month between the Russia and the Ukraine in this war. This is a horrible event in history, which really wasn't taken seriously enough. And we recently, one of the things that has been driving this last little short rally that you've all seen, we saw drones strike Lithuania. We saw jets overfly Estonia. We saw jets and drones go into Poland and Romania. This is a massive violation of NATO. And a lot of people in the Eastern countries, as far as the EU goes, saw this as multiple incursions that brought about their demand to go into gold. If you remember, not that long ago in World War II, they were taking Deutschmarks and throwing them in the furnace to bake bread. The EU remembers what war was and what happened to their fiat currency when it went to zero and it was only good for cooking accelerant. So we are seeing a lot of nervousness coming out of Russia, coming out of the Ukraine as well, but the surrounding countries now. And as you know, I being in offshore trade, I would been watching Poland. Poland has been aggressively buying gold. I mean, not a little bit, 1, 2, sometimes 4 tons a month. So we are seeing the underpinnings of gold from a geopolitical side pump up the underlying value to the point where gold is now, for the first time, I believe it was 14 days ago, we saw gold cross over and become 20% of the held asset in central banks around the world. This has not happened in decades upon decades. So gold is in tremendous demand from these geopolitical situations, and the buying has been aggressive and large. So Russia is is definitely contributing and contributing in a big way. And every time that Putin has mentioned 3 times that he has no problem bringing nuclear weapons to the battlefield. Every time Putin says he's bringing a nuke in, gold jumps about $20. It's a freebie, guys. I mean, if you're a scalper, there you go. But we have been seeing these 3 issues: interest rates against paper, Chinese internal failure, and the Russian-Ukrainian war drive this market, and it's been swirling about for a while. And I don't think we're going to see anything change. And I will point out before I run out of time here, which I'm out now, um, President Trump at the United Nations said point blank, anytime Russia flies over your border, you should shoot them down. Well, last time I looked, when you get in an aerial dogfight over your borders, if you're Poland, if you're Estonia, whoever, it's an act of war. And so we're going to see what's been happening as far as that goes, and if Putin's going to continue to push that, or if, with Zelensky's statements yesterday in his Brett Hume interview, if we did about a half an hour, it's very interesting. At the end of it, just give you a summary, he said, I'd like to come to the table. Let's get this thing over with. He's lost tens of thousands of individuals. He would love to have this end. So those are the 3 things. That's the mix. That's how I'm briefly seeing it. And I hope you had a great lunch, and I hope you learned something too. So thank you for dialing in.
Fantastic, Peter. Thank you so much. Now, we don't have any live questions at this time from the chat, but I did want to just ask you, I know that you're speaking a lot. You probably get a lot of frequently asked questions. Is there anything that you tend to get asked that you think our audience might want to hear the answer to today?
What's interesting is that I hear a lot from individuals going, are we running out of gold? I mean, that is really a big question. People want to know. They're seeing a ton here, a ton there, 25, 50 tons disappearing off the table. Are we going to run out? I don't think so. I think we could get to a zero net sum game where we're refining and mining as much as we're receiving, but I don't think we're going to run out of gold. That's the number 1 question. The number 2 question is, should I get in now? I hear that all the time. And I always say to people, this is the most important thing to remember. The theorem of dollar cost averaging is probably the most important thing for investing in metals. If you buy it at 3,500 and it breaks and it goes to 3,000, you buy some more. If it goes a little lower, you buy some more. And when it rallies, that will pay for itself. So I believe that you can still get in here. I was the first person to trade silver at $50 on the trading floor. And I thought it was insane, but I had bids at $50, so I was selling it to them. And the silver market, the platinum and palladium market, and the gold market still present opportunities, to answer your question.
Thanks, Peter. Now, I do have a couple of questions here now from our live audience. I'm going to start with this one from Gerard, because you were just talking about gold and silver.
Hey, Gerard, how are you?
Gerard is asking, will people switch to gold and silver on the next crypto drop?
Here's the problem with crypto drops. If you don't follow me on LinkedIn, you should. Get a chance to send me something, Gerard. I try to keep up with that. And I was doing swaps from crypto to gold not long ago, and they did very well because crypto broke $20,000 on that little swap. But the answer is yes. And here's the reality on what's called, Gerard, I'm sure you're familiar with counterparty risk. Who's standing behind the real value? Crypto is not a sovereign currency. It's not backed by a nation. It's not even guaranteed by a bank. So when it breaks, if you decide to bring it in and get whatever fiat you want, euros, dollars, there's nobody behind it. It's an open outcry market. Whoever bids and whatever they bid at versus gold, which is posted twice a day on a global market, which is called the spot fix. Gold has a value and has had a value going back to the time of the pharaohs and Tutankhamun. So that has had an underlying real value. So to sum this up, when cryptos break, we do see a run into gold, but it also does affect gold. When prices are coming down and the tides go down, all ships go a little lower, but it doesn't break as hard.
Thanks, Peter. Now, I know we are tight on time here, but I had one more question from
Sure.
Clay for you. Clay was asking, can or will the US continue to buy uranium nuclear fuel from Russia?
Well, great question. We do mine here. Yellow cake, as it's referred to, is something that I don't trade. I am a licensed broker. I can trade it if I want. It's something I'm not as familiar with as I should be. But I think let's go to the reality here, which is we haven't built a nuclear reactor here in 7 years. And what they're referring to now as the fast track, which I'm involved with as far as mining go, from the mining side, they're allowing more permits to come out. So we don't want to put the horse in front of the cart. We first have to get the permits issued for the new product. And then as the new refineries then turn it over to the new megawatt plants, I think there's going to be a time gap there of more than a few years. So how will it influence it? I don't think it's going to be as great as we think initially until the demand comes in, Clay.
Well, Peter, thank you so much for joining us today. It's been a pleasure having you on, and great that we could answer a few of those audience questions too.
Absolutely. Thank you, everyone. And I hope you enjoyed it. And I hope you had a good lunch too. Bye-bye.
Oh, yes. And to those watching live, be sure to stay tuned as we have a lot more in store for you in this Money Show Virtual Expo. I hope you have a wonderful rest of your day. Take care.